In this video, guys, we're going to talk about investing and trading at the same time. Stay tuned. Hey guys, warm welcome to you. Alright, so as I'm filming this, we're in the midst of the coronavirus crisis, and it is really a crisis. Who knows what happens with this. However, these kind of points are pretty useful regardless of when you're watching this. So I hope that we're all through this, everything's fine again, and you're kind of stumbling across this video thinking, oh, this is quite interesting, let's see what Mark's got to say about this. But anyway, this is where we are now, and the reason I kind of bring this up is because I know a lot of traders are thinking about maybe investing in some things, or maybe not yet, but at least kind of thinking, hey, you know what, some of these stocks that maybe might be worth holding for the longer term. I know that I've got my eye on a few, thinking, okay, is this a longer term play that's worth investing in? Generally speaking, I don't invest in many stocks. I've invested in a few, but I kind of try to keep it separate. And so this is really on that line. If you're a trader and you want to invest in stuff, what's the kind of best practices to keep things so that you can still trade and kind of be a profitable trader, but at the same time have your investment and see hopefully those mature and generate return for you as well. Okay, so the first thing I think is a good, prudent thing to do is to keep separate accounts. Now, obviously, you're probably going to be trading different products. You know, maybe you're trading futures, or you're trading FX, or CFD, or spread bet, or whatever it is. You're probably trading leverage products, so it probably is going to be a separate account anyway. But have a separate provider even if you do. So if you're trading underlying stock or underlying shares or whatever it is, have it completely different, because you don't want to be seeing it regularly. You don't want to have it in the same account. You put some money in the investment account, you buy whatever you're going to buy, or you scale in whatever your plan is, you execute that. It's completely different. It's completely different. You know, your trading is your business, investing is just something you're investing in for longer term. You don't care about the short-term moves. In trading, we do care about short-term moves, and depending on what kind of time frame we're trading, of course, it might be even shorter-term moves. You get the idea. So separate accounts, really good idea. Probably going to be the case anyway because it's a different vehicle, but you get the point. Second thing is trade different instruments. This might not apply for everybody. It definitely applies for me, and I know many traders the same. I can't invest in something that I'm actually trading as well. So there's no way I could invest in, let's say I'm trading Apple. I couldn't invest in that and trade it, swing trade or intraday, because I would want to close my investment, because I would say, hey, this is a short now for the next however many weeks or days or whatever it may be. I'm going to trade it from that side. And if I've got the conviction to trade, why would I hold the investment? My mind will be like, why have you got the investment on? You're investing for longer term, but if you think it's short term, why can't you get a better price? And that would just be clouding my judgment. So I'd never invest. Personally, it might work for you as well. Never invest in stuff that you're trading. Invest in different things. So from my case, for example, UK stocks, I very rarely trade those. So I'd happy to invest in those if I believed I had long-term potential to make some gains in it. And then I might trade my US stocks intraday and swing trading and stuff, but I'd never cross them. And if I had an instrument or market that I was investing in, I'd never ever trade it. Or if there's a market that I like to trade, I'd never ever invest in it. I just think that it creates too much conflict in the brain personally. You might be able to get around it, but I just think it makes sense not to do that. So many of you are trading FX and stuff anyway, so you're probably not going to be looking mixing the investments and trading. But if you're trading stocks, that's very useful, I think. Okay, number 3, guys, is don't watch your investments. Goes without saying, you stick it in, make your plays, make your bets, so to speak, and don't watch it. You know, we're so used to watching and monitoring our portfolio of trades, swing trading or day trading, obviously day trading with there, swing trading even, so you're kind of used to monitoring it maybe multiple times a day, maybe once a day, but you're still monitoring it. With investments, you've made your choice, you've made your decision, you've probably got a multi-year thesis. It doesn't need to be looked at twice a day. You know, if you're looking at it, 700 times a year and you're holding it for a couple of years, you're looking at it 1,500, 1,400 times, whatever it may be. It doesn't make any sense. All it's doing is trying to urge you to get out of the investment, whether it's going well or bad, and you're not sticking to the thesis. So just don't look at it all the time. We kind of say that as well with trading, guys. Don't trade your P&L, trade the market. And this kind of ties in with this. Make your decision and thesis and stick to it. So you know, I'm not a big investor, so if you kind of want some more ideas on investing, there's probably better people from a pure investing perspective to listen to. Again, like I say, I don't pretend to know everything, guys. You know, I've got reasonable experience in trading, so I kind of trying to share what I can to try and help you where I can. And this is definitely something that I think is important, is that you have a thesis, you have an idea, and you stick to it. So the thesis might be, okay, I'm going to invest in this stock, I'm going to come out if it goes wrong at this point, and that might not necessarily be a price, it might be you know, something tangible, like a fundamental thing. I'm going to come out if they can't restructure their debt. Something off the top of my head. I'm going to come out the upside if they suddenly say that, hey, earnings are growing now and after 3 earnings cycles, or whatever it may be. So you've got a thesis, you stick to it, and you don't meddle with it. A bit like trading, guys, you know, but from a technical perspective, the thesis is, okay, I think this double bottom is going to hold and we're going to rip back up and fill the gap, for example. Your trading idea is that you hold that until you get stopped out, or you come up and hit the gap, or maybe you have, and I'll review it after 2 hours or 2 days or whatever it may be. So, you know, it's a similar kind of thing. And the final thing is, don't invest on margin. I don't think it's a good idea, especially in this environment, and just generally, you know, investing on margin means that you're too worried about the monetary gain. You know, we're already trading leverage with actual trading. You know, adding that as well means that, you know, you're vulnerable to having to put more money in, vulnerable to, it's just exaggerating stuff. Investing is much more a case of, okay, here's my money, I'm investing in this, and I'm hoping for a good return over it. Maybe you get some dividends from it, that kind of stuff. So with margin, and also don't forget, guys, if you're trading on margin, you're paying a daily charge anyway for most of the time. And so, you know, that can add up to a serious percentage if you're holding it over multiple years. It's not really advised to hold a short-term product over long term, like a CFD or a spread bet over the longer term. There are some, you can kind of trade the CFD futures or spread bet futures, but again, maybe 3 months ahead. Maybe sometimes they offer the 5-month ones, but that's not generally the best thing. And again, you wouldn't be able to do that with a stock or any share that you particularly wanted to invest in. So trading on margin, generally, I can think that it should be avoided. And there's some ideas, guys, for separating trading and investing, or investing and trading at the same time. Those are my thoughts on it. Take care. See you next one. Bye-bye.